Hey, Bill Soriano here from Pittsburgh. It's another video for you guys on supply and demand training, right? Supply and demand zones. Again, we're looking for these supply and demand zones on the 4 hour time frame. Once they're hit, we drop down to the 1 hour. Look for our entry. But one of the main parts of this strategy is being able to determine market structure. And that's where the comments I'm getting back, people that are getting back to me after watching my videos are saying that that's the hardest part for them. And of course, that's the part that takes a little while to learn. But over the past year or so in my videos, I've shown you a way that you can quickly determine what the trend is by using three moving averages, the 50, and these are EMAs, the 50, the 200, and the 800. You can see them on my chart here right now in OddCAD. And this indicator is called the EMA 3 times 1. So you can just put this one indicator on your chart. You don't need to put three EMA indicators. You just use this one, and then you're able to set it, right? So that it's a 50, the 200, and the 800. Okay. Now, my 50 EMA is the aqua colored one. My 200 is the gray, and the blue is the 800. Okay. So now, and what I've told you in the past is, in order for you to have a bullish trend, and again, you're doing this on your 4 hour time frame if you're using the strategy that I teach you. And by the way, I want to say that just a quick disclaimer here that the purpose of my videos is not to give people trading signals or anything like that. I'm just simply passing on the education that I've learned over the past few years from the live educators in our company and also the experts in the community that I am part of. Okay. So the trades that I show you are trades that already happened. So I'm not giving signals, not trying to give any signals. I'm just passing along the knowledge that I've learned to you guys. And if you decide later on you want to join our company and become part of our community, that's fine. If you want more information on that, I have our secret podcast, a series of 10 videos that I can share with you. Just let me know. I'll send you the link to that, or it'll be in the description area of this video. Um, and one of the things that our live educators do is when they see situations in the market that dictate that there could be a bullish or bearish scenario in a certain pair, with part of our service, you can actually get a signal sent to your phone for that. Again, they're not trading signals; they're just letting you know that conditions are right. You need to further investigate before you take the trade, right? So there's nobody taking trades for you, nobody investing your money. They're just, helping you along, telling you conditions are right in the market, and you can get a signal sent to your phone. But anyway, not a trading signal, but a signal saying the conditions are right. So anyway, in order for you to have a bullish scenario, you just have to remember AGB. Okay, and that just means that uh, for bullish, the aqua needs to be above the gray, and they both need to be above the blue. Now, in this scenario here, you could see that that's not the case. This is BAG, right? So a bullish scenario is AGB, where it's aqua on top, then gray, then blue. So it's the 50, the 200, the 800. Bearish scenario is where the blue is on top, right? Then the gray, then the aqua. Okay. So that's blue, gray, aqua. Okay. So that's the bullish, that's the bearish, right? And I'll show you some examples. This one, of course, is not an example. And that's kind of what I wanted to show you. I'm kind of going over the pairs that I just went over on Friday night. I posted a video on YouTube with the weekly recap for the week of March 2nd. So I'm just looking at those pairs that I went over in that video, and I'm just trying to show you if you would have been able to get in that trade by using the moving averages to determine the trend. Okay, it's not always going to work for you. As a matter of fact, the best trades are going to be trades where you determine the market structure yourself because it's just changing from bullish to bearish or bearish to bullish. Okay, but in this scenario here, we had this 4 hour supply zone right here, and we did have one right below it as well, right? So we didn't know what was going to happen. Price came into the zone. When we dropped down to the 1 hour here, we got this move up, and then we got a new low here. So this was our area right here that we were looking for our change of character to occur, right? So we were looking for a break of structure there, basically at that wick high. To get that change of character, we get it right there. And then once we get that change of character, and again, on the 1 hour time frame, this is, this is more of an internal structure that you're looking at when you're getting a confirmation on your trades, right? So price is moving down here into the zone. You don't want to just take the trade because it can continue moving down into this supply zone down below here, right? And you would lose the trade. You can't put your stop loss all the way down here because then you would have an ineffective risk to reward ratio for the trade, okay? So we get that actual break. So again, you need the body of the candle to close above here. So this candle does not count because this is a giant wick rejection here. But then the next candle does follow through and give you that break of structure, giving you a change of character, okay? So now you identify, you have to look here, and you don't have any imbalance, right? So there is a possible refined supply zone down here. I'm sorry, we do have imbalance. I'm looking at this wrong. We have the imbalance here. So this is an imbalanced supply zone. Again, I'm not real fond of this candle here because it's not really a momentum candle, but that is, of course, the supply zone that you would use right there. And and then we need to wait for price to come back to them. So this this is a potential trade coming up in the market. This isn't one that I went over in the last video, but I did just want to show you that because that's how the strategy works. Okay. Let's go to AUDJPY. So now if we look at the moving averages, we have AGB. So we're definitely, if we just use the moving averages, we could determine that we are in a downtrend on the 4-hour time frame. So if we look for that supply and demand zone, which was right there, price comes into it. It does go through it a little bit, as I went over in the video, but this looks like it's a pretty good trade for us there if you would stay in it through the weekend, or if you got out on Friday, it would have been a profitable trade as well. AUD-USD, now this one is a little bit different in that this is a buy opportunity, and of course, the moving averages are not lining up for that. They're kind of lining up actually almost for a sell, right? At the time that this trade is taken, you have AGB from the bottom up, so that's a bearish sign. And of course, you wouldn't be able to get into this trade. Now, why are we looking at this as bullish? And the reason we are is when you can read the market structure, you can scroll back and you can see price moving up here, right? You get a break of structure here, a pullback, you get a second break of structure, right? You get another pullback here, and you get another break of structure to the upside. Now, what I would say is if you look at this move here from here to here, if you do a fib on that, right, you don't quite get a 38.2% pullback. You see that? So this to me, even though this would be a break of structure to the upside, this doesn't count as a valid pullback to me as far as swing highs and swing lows go. So this would be my swing high, right? But my swing low would still be down here, right? Let me get rid of it. Because my last valid pullback, right? This came down here, came back up. So where my swing low is probably right down around here. And again, some of this is objective, so that's why it's a lot of times hard to determine. And I can't figure out how to shut these tools off all the time. So what I'm saying is, to me, I don't have a change of character in this. This is bullish. I don't have a change of character until this low gets taken out right here. And again, the body of the candle always has to close above or below the wicks in order to have a valid break of structure. Now remember, break of structure just means you have a continuation, right? The trend is bullish, you get a break of structure to the upside, or the trend is bearish, and you get a break of structure to the downside. A change of character is a break of structure as well. It's just going the opposite way against the current trend, right? So the trend has been bullish. We get a break of structure to the downside, calling that a change of character. Where the trend is bearish, we get a break of structure. Did I say that right? The trend is bullish. We get a break of structure to the downside, causing a change of character. Or the trend is bearish, we get a break of structure to the upside, causing a change of character. Now, to me, not all changes of character are valid. One reason that could invalidate a change of character is there an imbalance right above or below where price is moving? And of course, there is right here. We have an imbalanced 4-hour supply zone right here. So that kind of invalidates that change of character for me anyway. But the thing that I go by is this: when I get a change of character, that's not enough for me to change the trend, right? If I see the market as being bullish, which I've seen right here, a change of character does not change my mind on that. Okay, now once I get this change of character, I need a confirmation. I would need to see some kind of a valid pullback and then a break of structure to the downside in order for me to say, okay, now the trend has changed from bullish to bearish. So that's what kind of saves me in my strategy, my trading plan, is because I don't need it's sometimes hard to determine if a change of character is valid or not. Because again, if there's liquidity, if prices move to fill liquidity, to grab liquidity, or to fill an imbalance, or if there's another supplier demand zone right near that area, you can't really count that as valid change of character, right? Here, we need price to actually come down and create a change of character in order for it to get to our 4-hour supply zone here, or demand zone, I'm sorry, demand sell, supply is selling, demand is buying. We need it to create a change of character in order to get in this zone. So if we're going to just say once the change of character occurs that we're no longer still bullish, then there's no point in even marking up that zone, right? So that's just kind of something that I wanted to show you with this. And again, this comes down into the zone. And if you drop down to the 1-hour time frame, right, price comes into the zone here. Here's our change of character. Price moves up, breaks structure here. We get that close above this line here, which gives us our change of character. And then we were looking for price to come back to this area here, which it did not. Okay, so this is just an outline of a trade here, but it never really executed because price did not come back to our imbalanced supply zone down here. Okay. Let's move on to the next one here. We're just trying to show you if you can determine the trend using the moving averages. So in this particular instance here, you would have missed taking this trade because you would have, if you use the moving averages, you would thought the trend to be bearish instead of bullish. But if you read the market structure correctly, you can clearly see that the current bias in this market is bullish. Let's go on to EUR-GBP. Now this one again, at the time we're taking this trade, the same thing happens here. The moving averages are telling us that this is bearish, but this is a very strong bullish trade here that actually ends up being a 3.85 risk to reward ratio trade. Again, when you scroll back, you can see the bullish move upward here. Yes, price was moving down, right? We get this big upward bullish move, and then we get several of these break of structures to the upside here, right? That give us a confirmation, right? The change of character occurs probably right here because this is a high here and then price makes a lower low. So if we use this area here, we wouldn't have to use this area for a change of character because we got a clear confirmed lower low in the market. So now this would be our swing high right here. This would be our swing low. Price comes up, breaks through there. We get a close above there. That gives us our initial change of character, okay? And then we get several pullbacks and break of structures, giving us our confirmation to the upside, okay? So we're clearly bullish on this. Again, now, because of the way this looks here, I would not count these as swing highs and swing lows or swing lows here. I would come all the way down to here again for my swing low. And again, price does break through that. But to me, there's a valid imbalanced demand zone right here. So it's not a change of character that I would look at. And of course, we don't get that second pullback and break of structure to the downside. When you look at this, this is just kind of all one move up. Okay. These count as breaks of structure here because they are pullbacks. But I wouldn't count this as a swing low once this makes this new high. This would be the swing high, but the problem is that if I measure a fib, again, from this low up to here, I don't get that 38.2% pullback, see? So that's what I use to determine if something is a valid pullback in order for me to determine that a new swing high or swing low has been created. Now, I can use that pullback to say, hey, I got a clear break of structure to the upside, right? But I can't use it to make this the swing low, okay? So if this is not a valid swing low, then when this makes a new swing high, I have to move that up to there. I can't move the bottom part. The bottom is still down here, okay? And again, you have to use this low here because here's the last swing high that was created. When price breaks that, right? Price comes down, breaks that, comes to here. Now you have a new swing high right here, okay? Then that swing high gets broken as well, but it's not a valid break here because you don't get a close above. So some people may actually still use this area here as the swing low. I'm using this area here. But if I key again, now I get a new high. But again, I can't move the low. So none of these are 38.2% pullbacks. So I can't use them in determining a new swing low. That's the only thing. That's the thing that's hard to understand for people. And I get it. Because with this market structure, I can use these. I can use these pullbacks to say there's a valid break of structure there, right? There's a valid break of structure here. There's no valid break of structure up here because no candles close above the wick. Okay. And then price moves down, right? And gets to our supply zone right here. I'm sorry, our demand zone. And then you can see the reaction, right? So if you drop down to the 15-minute chart here to try to see what we were looking at here, The entry was right around here because we got the change of character to the upside. We had an imbalanced area right here, and this wick came back and got us into the trade. Okay, so that's that. So again, can't use, if you're using the moving averages to determine your trend, then you miss out on that trade. Now, EUR JPY, this would work for you, right? This is AGB from the bottom up, so it's bearish. This was a bearish trade scenario. This trade, though, was actually not a valid trade to take. I have it marked up here, but you can see there's no, I just wanted to leave it like this to show you there's no imbalanced supply zone here. The imbalanced supply zone is all the way up here. So this trade would actually not be valid. And I have that marked up because what is happening here, it looks like it's just going to eventually move up to that zone there. And had you taken this trade, you would have gotten stopped out at that 1% loss. So that's why I have that marked up still. And then there's just one more, the NZD Chef, and this one would have been valid for you. You have AGB from the bottom up, meaning it's bearish, aqua gray blue, the 50, the 200, the 800. And so this, we traded from this bearish, this supply zone right here. And we see the nice trade that we had come out of that. So that's, that's kind of the things, guys. It's hard to determine a lot of times which way that trend is going. So again, I've drawn this out for you several times here. When you go to the 4-hour time frame, your ideal situation is you see something that looks kind of like this, right? This is the ideal situation of it. This shows you that this isn't a clear uptrend. You have this could be you could have been coming from down here. This could either be a break of structure or a change of character. Price may have been moving down, right? Prior to this, price could have been moving down, right? Prior to this. Okay, and then right here, just adjust these a little bit, make sure they're valid pullbacks. Right here, you get that change of character. Okay, but again, at this point right here, I would still be bearish. Okay, now, because I definitely would have I'm sorry, yeah, I would still be bearish, right? I definitely would have a supply zone right here. It's pretty close to where I'm at. There could be some liquidity there. And so this could not really be a valid change of character anyway. But again, we don't need to try to determine that because we wait for a valid pullback and then that confirmation break of structure to the upside here. And then we got that. So once we get that right here, that tells us that it's now safe to say that this is bullish, and we could try to then identify and see if we have an imbalanced demand zone down in this area right here, right? But we can't do that before that, right? Because a lot of times what happens is when you get this change, this initial change of character, it's pretty close to this supply zone right here. So a lot of times what happens is price just moves up into that supply zone, right? And then it may move down like this, and then it might pull back and then just continue lower, right? And now you have a new supply zone right here to trade from. So that's kind of what you're looking for. So if you get here, if you come to the 4-hour chart and you have something that is clearly bullish like this, right? And again, if there was a break of structure down here, then it would be clearly bullish still right here. But I'm just saying, if this is where you're starting from, you see this, you know that this is bullish, right? You have a confirmation. You know this was either a break of structure or a change of character here, and now you have a valid pullback and a move higher, giving you that confirmation break of structure, which we would always call a 2x2. We used to call that a 2x2, right? You get the change of character, and then you get a confirmation break of structure to tell you the trend has now changed. Okay, now that the trend has changed, let's say price continues downward here. You have this area here. Let's say price now continues downward and you get this change of character to the downside. Okay. So you get a change of character to the downside. Again, that is still bullish, right? You know, you went through this demand zone here, but more than likely, you probably have another demand zone right down here as well, right? So you went through this one, right? But you have another one right down here anyway, okay? And since this was bullish, the change of character does not change the trend yet, okay? Because what could happen is price can move down into this zone here. And then of course we would expect it to go back up, right? Or what can happen is, the other thing that can happen is price could pull back, a valid pullback of at least 38.2 using the Fibonacci retracement tool, right? Valid pullback. And then you get the break of structure to the downside. Now it's gone through this zone here. And now we have a clear supply zone up here that we can trade from, right? Remember, this is a demand zone, so we know we're buying from that. Of course, this would be a supply zone because we would be selling from that, right? So that's kind of what that would look like. Now, unfortunately, this may come down here. The market doesn't move just like this, obviously, like I've showed you in other videos. The market may come down here. It might do something that tells you you want to take this trade to the upside, right? And then it continues downward and you have a losing trade. That can happen to you. That can happen to you, right? But at least you know now that you're going to take that bearish. Okay. Then sometimes you have markets where you just keep getting changes of character, right? Right? You get this move up, then it breaks structure to the downside, then it breaks structure to the upside, then it breaks structure to the downside, right? Then it breaks structure to the upside, and you just keep getting these changes of character over and over again with no confirmation of a break of structure, right? These are the pairs you just don't want to trade. You just leave those alone for this week. And again, you can come to your charts like I do on the weekend, Saturday, Sunday, or even Friday night, and you can go through and mark up your zones, determine which way each pair is going on a 4-hour time frame. And the ones that you can't determine, you just don't trade those, right? You can put a blue flag by the ones that you've determined are bullish, a red flag by the ones you determine are bearish. And then that way you set your alert and then you just wait for your alert to go off. That's all you need to do. So I hope this video helped you guys. Please hit the like button, put a comment down below there. As a matter of fact, if you watched this video this far, please put a 100 in the comments below so that I know that people are looking for this information and I don't just waste my time making these videos. So give me a like, subscribe to the channel, comment down below. And again, if you've gotten this far, please comment a 100 down below in the comments. Have a great day, guys. Take care.